Good morning, everybody. I am going to try to capture another live trade today. Before we get going, actually, let me flip this chart over to a regular chart. So turning extended hours off. There we go. And let's go through our watch list. So again, this is going to be a one lot lesson. I'm going to try to find some things that we can trade using only one lot, just for some examples' sake. Not going to try to make a killing. It is a Friday. Netflix, what do we got? Nothing really. I'm just going to keep scanning. Just like the last video, I'll probably fast forward through this, and I'll be back to you in just a moment. So I'm recording a little bit of voiceover after the fact, just to acknowledge that, yes, this video is a little bit boring, but what I want you to take away from that is that that's how trading should be. You don't want to be emotional. You don't want to be getting fired up over certain companies doing things that you either want or don't want. You want to be objective, act mechanically. When you see a setup, you take it. If not, you just wait. So I've gotten a video loaded up here, and the reason I like this setup is we're forming a few hammer candles here, right? Lower wicks have been forming. It's just below a key resistance point, and I think the target's just simply going to be yesterday's high up around here, just above 550. So if we can get a breakout above the highs of these candles, it looks like we might get a little entry here. I don't want to waste all of my time and just focus on it here. So what I'll do is essentially just set an alert right around this level. So we'll go create alert at or above that level is fine. Create, and we can continue to browse our setups, but things are still set up here in case, that alert triggers, and we can flip back over quickly and take action. So coming back to revisit this NVIDIA chart, it doesn't look as favorable as a setup now that these wicks have sort of been violated with this large red candle to the downside. And essentially what we're going to do is either have to wait to see if this sucks itself back up, so we form another 5-minute hammer candle and print another lower wick. That would be a good thing for this setup. But the way the chart sits right now, sort of losing interest, doesn't really look like the buying strength is there to take it back up over those highs of days and into ultimately our next target, just above the 550 mark, so 551 maybe. So we'll leave the alert there, but it's not an A++ setup anymore, just know that. Yeah, so on this setup, see how we now have a red continuation candle to the downside, especially being punctuated by these red candle right here breaking down beneath the low of the day. Definitely not really interested in a long setup now. So the reason I'm checking out Apple now is because it looks like we're starting to see a head and shoulders pattern form, right? We have a shoulder 1, we have a head over here, and then of course shoulder 2 is forming, and we want to look out for the break of this, which is considered the neckline, to go lower. So 118 might make a nice target here, maybe actually a little bit lower. 117.50, these prior highs, upper wicks in that general area. I don't want to just hop in right now. It looks like it's starting to go, but we do want to wait for a little bit of some consolidation, maybe a little bit of a bounce here at this 5-minute 200 SMA, and then get in once we see strong confirmation underneath, let's say this 118.60 level, and there it goes. Let's get our things set up over here. We'll go Apple, and we will zoom in a little bit, make sure we're not missing this move now. And again, patience is going to be the key here. It's a longer term pattern. I'm not entirely worried about, missing it here on the 5-minute on the first break of this neckline. Again, it would be great to see a little bit of sideways consolidation before getting in, but let's load up some puts on Apple. We'll go out a week because it is a Friday and we don't want to get caught up in theta burn. So if we're wrong, it's going to hurt that much more if we're trading same day expiration. So again, here we'll load up the puts there. Hit enter to confirm that, and what we want to watch for is some sideways consolidation here. Again, we're at the 200 SMA on the 5-minute, which is a pretty strong moving average. We'll see if they can bounce it. It looks like they're going to try to take it lower maybe. But again, so patience is going to be key here. Looking for the break of the 118.61 with a green close below, and we don't want to chase it. So it is down on the day so far. So we want to be cognizant of that, and it is a Friday, and we don't want to do anything too risky. But right now we're building a little flush point there at this 118.60 level. If it does decide to go, maybe we'll get into the trade. and we'll see what happens. So again, not wanting to get caught up in some sort of bounce or pullback after this large red candle formed. So patience is really key here. We're waiting. I'll keep you updated if the setup looks like it's going to come back into play. Again, we can do something like set an alert just below the 200 SMA. So we'll do create an alert, and we will go at or below, create that alert. And see, this is why you don't want to just jump into the trade immediately. This green bar right here has already taken the contracts down about 10 cents per contract. And if you're trading a 5 lot, a 10 lot, that hurts, right? It's not a good way to start the day. So we're essentially going to wait for this confirmation. We have a little flush point here. I'm going to alert that in the chat. So Apple AAPL flush point at 118.6 for the break of that neckline. 5 minute. There we go. So that's been alerted in the chat. I'll just bring that over and show you guys right here. So it's this final alert down at the bottom that we just made. Same thing that I'm watching. I'm not in the trade yet. Everyone has a fair opportunity to get into this one. And we'll just let it sort of brew and sit here. We'll have our alert in place. Let's actually bump it up just a little bit. So if it does start to break down, with some speed, with some high tempo, we're not going to miss it. So we'll put it somewhere in there. And we'll continue to scan for other setups across the board. Another thing that would be great for that Apple trade to break down is if this 15-minute inverted hammer here in the ES futures actually did amount to something, and maybe we saw a pullback down here to VWAP, which is this yellow line. That would obviously bode well for a red or downside trade on Apple. So here we go on Apple. It looks like we're finding some resistance at this previous flush point, this 119 level. Again, we're not going to jump the gun here because we do need a flush underneath this 118.58 level before seeing any confirmation. So patience, again, is key. We have our alert set, but this upper wick does look pretty good so far. We'll keep you updated. And flipping back over to Apple, this is the sideways consolidation that I thought would be good for this trade, and it's still looking pretty good. We have a red inverted hammer that's trying to print here. We'll see what happens with the broad market. We are in a pretty strong market right now. If we look over at our breadth, 14-1 and 5-1 on the NASDAQ. So it's not really something I want to be fighting, but the setup does look good, right? We have a longer time frame head and shoulders. We have a shorter time frame flush point. The ticks are holding the zero line, which bodes well for more upside. So it might not even come into play. But it's patience pays, so we're gonna wait here and see if we get an alert triggered, and if we can move lower down below our 200 SMA, break this key support, and grab a couple bucks out of this contract. So patience. Here we go. Actually, here's a little tempo increase. We're watching. We're not gonna jump the gun because again, we are fighting a pretty strong market right now, as noted by those internals. We don't want to jump it. So patience here. And I'm just going to leave it on this screen because, we did see that really quick flash of tempo increase, and I don't want to miss this break if it is about to happen. Okay, and just like that, we're getting a little bit of, suction back up and forming a little bit of a lower wick. So I will start to scan for other setups. It looks like that little flash of volatility has evaporated, and yeah, we have our alert set. Again, that inverted hammer didn't really amount to much pullback at all, so no action yet. Still being patient. We'll check our Apple chart. Oh, here we go. The alert was triggered, and it didn't send us anything. I don't know why, but looks like our alert was triggered. We are watching, and it looks like it might want to go. But again, patience here with all of this support. Don't want to get caught in a nasty bounce back up to the upside. And there it goes. We're going to jump in at the market. We're in. And we are going to monitor this one for continuation lower. Our stop loss is going to be if we get acceptance over our 119 level. So we're just waiting. We're going to be patient with this trade. It's a longer time frame trade. We're looking for somewhere around 1825, let's say. Let's float an order out at 210, see where that puts us. That seems actually just about right if that sort of area of consolidation acts as a magnet. and let's see what happens if we can get there or not. Our stop loss will be over the high of this candle now, not necessarily over that 119. I guess it's very similar, but we are in the trade. We have one lot on. Again, not trying to make a killing, just sort of illustrating how these alerts work, how you can trade with one lot and be successful. All we really need is to get down into our 18.25 level. We'll be front running the 18 whole dollar support. So again, patience is going to pay right here. We broke a key flush point. Let's just monitor for a continuation. And we're all out of the trade right there. So it wasn't a huge winner. I mean, we only made 16 bucks on the day, but we're trading a relatively cheap contract, right? This is something that you could easily start to take 5, 10, 15 contracts of as you start to grow your account size. And, that starts to add up. That's a couple $100 worth of trade right there. It was a quick one. The break of this flush point, we were in and out in a very short amount of time. So our target was right. It looks like we are starting to get a bounce around this 118 congestion area, right? So it's not like we traded this one wrong. We identified the correct target. We identified the correct entry. And who knows, it might float lower, but we're content with our nice little profit there. We traded the plan exactly as we said we would, and that's that. So I hope you enjoyed it. Again, the alert that was made to all of the community members is this one right here. We have Apple testing the neckline of the larger head and shoulders pattern, and then one more time, Apple the flush point at 118.60 for more downside. Another reason that I just want to point out we're not going to stay in this trade, even if it were to go lower, is this thing up here, right? We already talked about the fact that we're looking at a 13-to-1 positive breath on the NYSE and a 5-to-1 or 4-to-1 now positive breath on the NASDAQ. So we're not going to try to milk this trade and go counter trend when the market's being super, super strong. So if we come over to our futures, we'll notice that value is actually holding up higher as opposed to developing some sort of stronger pullback here. And again, you don't want to fight that when you're trading Apple, which is a huge, huge, huge component of both the NYSE as well as the NASDAQ. So the trade was correct. You can see we're starting to bounce here. The target was correct. The entry was correct. The stop loss probably should have been a little bit tighter given the fact that we were, let's just go through the risk reward scenario. This was sort of our reward area, and our risk was ultimately something like this. So it was almost a 1-to-1 trade, right? Stopping out over the high of that candle. So not the best situation, but a very high probability situation. So maybe if the stop loss was somewhere in here, I don't know how you would arbitrarily set one, but for now, it looks like we made the right decision. We're out of the trade. If it goes much lower, so be it. But for now, again, things played out just the way we wanted them to.